Hi, good afternoon, everyone. My name is Mohammad Azam Ahmad. Again, I'm Chief Risk Officer of SME Bank. I'm very honored to be invited to speak here today on DFIs moving forward, opportunities for growth, the SME Bank experience. I hope at the end of my presentation, you will have some ideas on where the new opportunities will lie for your organization to tap and create value post-COVID-19 pandemic. For my presentation, I have divided it into three segments. The first two will focus more on the regional and global economic environment, and also on the Malaysian context, and also it will sum up at the end of the slide on where are the opportunities lie for the DFIs, in particular, focusing on the sectors that will recover and benefit in terms of financing and other services opportunities for the bank to offer. And if I can move on to the second slide, the next slide. Before we go to the Malaysian context, I just want to touch a bit on the world economic landscape. The World Bank in its latest report forecast that the global economy to grow by 5.6% in 2021 and 4.3% in 2022. With this encouraging growth outlook, we believe other countries that have been able to address the COVID-19 cases, as in the case of Malaysia and some of our regional countries here, would be benefiting from the global economic momentum accordingly. So looking at the global growth driven largely by two major economies, which is China and also the US. In the US, in the latest economic report, it has registered 6.7% GDP growth in the second quarter from 31.2% a year ago. This strong recovery is based on strong orders for durable goods like machinery and equipment, which rose by 11.6%, and also unemployment rate, which has also been decreasing following high job losses in 2020. And furthermore, the most important is that interest rates remain low and will continue to be supportive of business and growth momentum. And we believe the Fed is not likely to hike interest rate in the US in the near future. Looking at China's economic growth, it registered 4.9% economic growth in the third quarter, slightly lower from 7.9% in the second quarter 2021. This is predominantly from the slowdown in the property market and also energy shortage crisis. However, the impact of the tight energy supply is not expected to be sustainable, and we believe China will be able to resolve this soon. And we expect China government also will continue to spur economic growth, including ensuring ample liquidity in the interbank market, accelerating infrastructure development, and relaxing some of the credit and real estate policies to spur economic activities. If I can move on to the Malaysian economy. In Malaysia, we registered astounding growth of 16.1% in the second quarter 2021, compared to a small contraction of 0.5% in first quarter 2021. This was again premised on the low base effect from last year, and also driven predominantly by various stimulus package announced by the government through Permekasa Permai and Permekasa Plus, totaling around 75 billion to spur and support recovery among the business affected by COVID-19. And based on this, we saw immediate effect is that businesses are able to recover and generate economic activities to drive economic growth. And this translated into some improvement in the economic indicators. For example, our IPP rose by 1.4%, driven mainly 8.7% in the export-oriented industries. We also see sales value of manufacturing sector continue to increase by 6.1%, driven by petroleum, chemical, rubber, and plastic products. And on the other part, on the services sector, revenue from the services sector also rose sharply, 20.5%, indicating that signs of recovery also happening on the services sector, which is important part of the economy. The outlook for the fourth quarter also is expected to recover further, again, given the gradual recovery from the reopening of more economic and social sectors as more people get vaccinated. And in particular, if you look at, go to slide 7, so this is where the opportunities lies to DFIs. In SME Bank, how we look at opportunities for the bank and to grow our businesses is by looking at the sectors that will recover from the pandemic and will also spur economic activities. These are the ones that will generate demand for financing and also services from the bank. And if you look at this slide, we have divided those sectors of the economy into 4 quadrants by focusing on those sectors and the 2 factors that are going to spur economic activities, and also by those that are impacting or contributing largest to the GDP, will identify where the opportunities lies for financing and services to be rendered by the businesses. For example, we can focus on the top 5 sectors that will lead the recovery on the 4th quadrant. If you look at the high contribution to the economy and also recovery time on the 4th quadrant on the top right-hand corner, the top 5 sectors that will lead the economic recovery and also create opportunities to DFIs will be: one is manufacturing, led by the growth in the E&E industries. Second is the ONG, due to the high oil price, which continue to drive activities in the ONG sector, whether it's downstream up to the upstream area. The third sector will be on the ICT, information, communication, and technology, which is driven by digitalization and digitization activities among businesses and consumers. These activities has continued to sustain even during COVID and continue to be as a new norm as businesses start to invest more on digital platform. And on the 4th sector that we want to focus, it would be on wholesale and retail. Again, this sector will benefit from the increase in domestic consumption following the relaxation of the MCO. And the 5th one would be the construction, specifically on the civil engineering subsector, where government-related infrastructure projects are aimed at stimulating economic activities and domestic demand will be focused on. This is an area where our SMEs will be in contributing a lot in the activities and require financing, especially in the working capital and to a certain extent capex as well. And if you look at manufacturing sector, manufacturing and is one of major component of Malaysian economy, which contribute about 23% to its GDP. About 98% of the companies in the manufacturing sectors are small and medium enterprises, mostly Malaysian focused, but with great potential for export. Hence, with these companies reviving and this under these sectors, we believe they will generate and translate into financing requirement and also services that can rendered to the DFIs in particular, and from this also translate into inter-regional import and export activities. Before I end, I also want to focus on the bottom part of the quadrant, where these are the lagging sectors to be wary of. Namely, one is tourism-related sectors, led by accommodation and travel-related activities. Again, tourism and travel-related activities are still constrained by the cross-border activities restriction. Second is on real estate and construction of commercial and residential properties. Again, in Malaysia, this is due to the oversupply situation which we currently have and which will continue to restrict and limit growth. And the third sector will be on the transportation, in particular air and water transport, where again, arising from cross-border restriction. We believe as the economy and vaccination level increase among the regional partners and global countries, this cross-border restriction will soon be uplifted and will spur economic activities. However, this may not happen in so immediately. Hence, we will remain focused on the top part of the quadrant as to identify opportunities for growth. With that, I end my presentation. If there's any other further clarification, please do not hesitate to contact me. Thank you very much.